Warren Buffett Investment Legacy and Retirement Reflections. Hello viewers of the East Realm channel. So our Buffett has announced his retirement. For his age, who is almost 95 this year, I call him Grandpa, which is appropriate because he's around my grandfather's age. He was born on May 30, 1930, meaning on August 30, 2025 he will be exactly 95 years old. And during Berkshire Hathaway's recent shareholder meeting, the legendary investor Warren Buffett announced his retirement. However, when he announced his retirement, he also conveyed a message to the tens of thousands of Berkshire Hathaway shareholders that he would still participate in supporting his successor Greg Abel. The story of the legendary investor Warren Buffett will be a story that many investors around the globe are interested in. We will look back at his entire life, his methods, his secrets, and his sharing at the recent shareholder meeting to draw our own lessons. What information do market analysis investors care about on financial statements? Is the company's cash flow stable? The answer will be in the Bear Number training program, a method to detect financial statement fraud. Bear Number will equip participants with deep understanding of financial statement structure, methods to detect fraud, identify problematic points on financial statements, and make correct financial decisions. If you remember, 2 years ago at Berkshire Hathaway's shareholder meeting, also analyzed the letter he wrote and his speech where the elders shared as they did. Because from the beginning until now I still laugh because uses the word grandpa. Because when it comes to our age, for example, I'm 45, 44 something. Thinking about being 95 means I still have about half a century of work ahead of me if I work like him, and I haven't even passed the halfway point. Right. So that's the first point, and the second point is I also feel a bit sad because Charlie Munger and Warren Buffett were a very harmonious and cohesive duo, and in their decisions. Last year we also had the sad news that Munger passed away, and this year Warren Buffett is retiring. This means I am seeing my icons starting to retreat backstage. So let's look back at his results during his time here. This is the information about his retirement announcement, and there's the word surprise because he hadn't shared it with anyone before. Even the new CEO said he was very surprised because he didn't think the announcement would be made at this meeting. And here this is the total stock increase from 1964 to 2024, which is about 60 years. Give us the number for Berkshire Hathaway's stock increase. I am sitting here with too many commas, so I need to steady myself. 5,002,284%. Okay, actually there's something online that makes it easier for everyone to understand. If you invested in this company in 64 and you put in $1 million, do you know how much money you would have now? 5.5 billion, 55 billion, 55 billion, that's $55 billion. Then you will see that at the rate we often call his average compound interest, it has slightly decreased recently. People often use the number 20, but now it's around 19.6%. But this means our elder retired at the peak. We often joke, because I always express my affection and admiration for Warren Buffett. Everyone just think by the time you are 90, if we are fortunate enough to live to those 90-something years, how will our health be from physical to mental? This elder is 95 and was still a CEO. He has retired, and we also need to see what he did before. People are not entirely clear what his position was. Let me remind you of his position. He was the Chief Executive Officer, meaning he was responsible for all direct operations, not just sitting on the board of directors and pointing fingers. And he's 95 years old. It's truly incredibly admirable. And before retiring, he still left us with some. Well, initially for this program, I intended to use the word legacy. Some legacies that Warren Buffett left for us before he retired. Here is also a legacy. Because before Trump introduced trade policies, Warren had simultaneously recorded or sold a record amount of stock to record a record amount of cash before the market showed signs of correction. Generally, investors are always like this. They mock him at first, calling him grandpa and doubting his moves. But when everything plays out, they admit, this is the Oracle of Omaha indeed. So 1 or 2 years ago people were saying the elder was past his prime old. Now they praise him sky high, as Berkshire Hathaway's stock has reached its peak, bringing the company's market capitalization to nearly $1,200 billion and his personal wealth to $160 billion. Then they praise him endlessly, and when the market fluctuates so rapidly like this, they see that the elder is truly a real oracle, because his vision is different from others. Here I'll reveal the number 1 legacy I learned from the elder. That is, don't care what the market says about you, okay? Just do what you think is right first, and I'm sure later people will realize that your actions, who knows, maybe later you will be called a prophet or an oracle. I see that the elder always has very insightful analyses, and if you are a shareholder of this company, I think you are very lucky to have him lead. Here I have a chart like this, and the capital team helped me, because I asked them to give me a chart from when he started picking up golf balls and began investing in his first stocks at age 11. Remember, there was a program about investing at age 11, and up to the current time plus 93-94 may be missing this year. Let's see. People say that now at 93 years old he has 136 billion, but now it's 160 billion. So people often say or often says, well, I don't know how you buy and sell, but let's see how your assets have grown after 5 years. Right. What is your comment on this chart? I see that from here onwards is when you start seeing a lot of money. Before that you don't see much. I see 3 points, 3 legacies. Earlier was 1, now adding 2 more, and I find this legacy very comforting to me, because nowadays I see young people often talk about financial freedom and then retiring early. That is, retirement is their ultimate goal, that is, try to earn enough money for our lives, then retire with $1 million. So let's look. His assets started, well, I won't mention the $5,000 section. Now let's say we start working after graduation around 24-25. Here 24-25, and you will see that until age 65. No, here the first $1 million is at age 30. Here, at age 30, $1 million. I'm saying this so everyone can relate, meaning from the time you start working 23, 24, 25 until the retirement phase, compared to his total assets, it's only about 1%. It's only, here, you see here, compared to his total assets now, it's not even 1%. Not even 1%. Because at age 60 it was about 1.4 billion, and 1.6 billion is 1%, that's right. So it seems that the first point is you don't need to retire too early, because 99% of his total assets were accumulated from age 60 onwards. That's right, 99%. So that's the first point I want to make, and for those who are still trying hard until age 60, this will be a lesson. This is a legacy, okay? That is, everyone should just persevere and stay on their path, and the sweet fruits will come. But the second point I want to make is that there must be continuous reinvestment. Here is also something I really like, because it clearly shows the issue of compound interest, because most of his total assets are in this company, and this company has a compound growth rate of about 19.6%. And thus it will grow very strongly in the later period. And the most important thing is that in Warren Buffett's investment philosophy, even his new successor said that he will continue the method called patient investing of Warren Buffett. And about patient investing, people, yesterday I did a live stream on the Follow the Money program at noon. A viewer came in and asked, so what if there is a liquidity issue and I can't cut losses, mister? Because people only look at 1 or 2 sessions. Here people look at decades, while we look at 1 or 2 sessions and think we can't cut losses or take profits or buy. We will have something to learn here, which is patient investing, so we can see. And one final point in this picture, you will see what, in programs about financial freedom and personal investment management, I have a concept that I often share with everyone. That is, after financial independence, financial freedom, we will reach financial happiness. Financial happiness means when our assets are not only enough for ourselves, but can also be shared with many people. Because people will ask a question, if a normal person were to ask, for example, what does Warren Buffett work for? Because most of his assets, he has already had charitable projects where he gives them away. No, this 160 billion is what's left. Because if not, his assets would be even larger, perhaps double the 160 billion, possibly the richest person. Because he has contributed a very large portion of his assets to the Bill and Melinda Gates Foundation already, so that part is not included in these assets. Do you understand? Right? Thus the 160 billion now is his current asset value. It's $160 billion. And I think he still has charitable projects managed by his son. But here the story here is that this is a story about what you work for, or the true meaning of work. Because if we only calculate for ourselves or our personal needs, we will immediately lose the motivation to work. If it were like this, with $1 million at age 30, he would have retired. Here retirement, here extreme retirement, here playing golf and engaging in many hobbies that can affect health. But here he lives a very happy life in a very ordinary house, drinking Coca-Cola every day. So here I'll add another legacy I can learn from this person. That is, he saw the value of labor. And when he worked, he created value and he shared. That's when life truly begins. And like that, retiring early is not necessarily good. So now the question is, how do we live? We live and work so that at least one thing we can learn here is to live as long as possible and live long and healthy. At 95, still a CEO, and let me remind you, CEO is Chief Executive Officer, meaning the person who makes executive decisions, not just the chairman who sets direction. I'll add live a useful life too, because he lived a very useful life. So here I also watched and reviewed his sharings not only in this field. We will specifically look at this final shareholder meeting later. Here are 5 principles that I really want to share again. His principles are: first, never lose money. If you spend money on things you don't need, you'll soon have to sell things you really need. This sentence is really great. Here to avoid losses, and he wants everyone to stay away from a gambler's mindset, which is very important. And sustainable wealth is built from prudent and intentional decisions, not quick profits. The elder once said no one wants to get rich slowly, and that saying has a lot of meaning. It means you have to build firmly. We will look at the next principle. The second principle he also shared greatly, that is focus on the long term, focus on the long term. Here is also a saying that I find very good, that is predicting rain is meaningless. Building the ark is important. This means that if it rains heavily and floods, you need a boat. That is, whether you predict rain or not is not important, because if you predict rain and you don't prepare a boat, you will still be flooded as usual. As usual. But if you have a boat, you are not afraid of rain. Here I also see that the analysis we provide, I always say, whether it's right or wrong doesn't define your value. The most important thing is how you structure your assets so that when it happens you have the ability to withstand market fluctuations. But most of us focus on being right or wrong. That's called clinging to what has already happened. But I find this sentence better: predicting rain is meaningless, building the ark is important. Then the third principle is to understand your investments, and he said that risk comes from not knowing what you are doing. What do you share about this sentence? The elder has also said many times that his investment method is extremely simple, that is, he only invests in what he knows. If he doesn't know something, he doesn't invest in it. He doesn't exclude it, but he says he doesn't invest because he doesn't know. Warren Buffett has said that he doesn't invest in Bitcoin because he doesn't understand it. It's that simple. It's that simple. So there is one of the biggest investment lessons to learn from this point. That is, the elder said that usually we should invest in companies with a clear and simple business model. Clear and simple. Those companies have clear purpose, goals, strategy, methods, and are of course easy to understand. Here I'll add a little more, because here Warren not only invested for himself, but he also said that by becoming a shareholder of his company, he also put his money in, and he is responsible for ensuring everyone's investment is protected. I think this means in a fiduciary responsibility context. This is a very important issue. Then fourth, avoid debt. You cannot borrow money at 18 or 20% interest and make a profit. That is, here he wants to warn against using borrowed money to invest. If we share this, I don't know if those who are trading stocks and often using margin will object, but I probably need to separate this into 2 parts. One part is stock trading, daily trading. We use borrowed capital and can trade very quickly. This is different from investing. For investing, very much avoid debt, and I completely agree with the view of avoiding debt, because in personal financial planning programs for the investment part, I always try to reduce debt. However, for example, this is about stocks. There is also real estate, where the capital scale is large, so it might be different. The fifth point is patience. The method of patient investing is something we just talked about at the beginning of this program. Even his successor said he will continue this investment method, only seeking truly solid investments. Imagine holding 300-400 billion US dollars now. Of course, if we ourselves are not patient enough, we will feel pressure to deploy the capital. Then the amount of money keeps increasing and increases very quickly. And the market, some people tend to say the elder is outdated, his investment method is outdated. If we are not patient enough, we will make wrong decisions. The saying here is that he said someone is sitting in the shade today because someone planted a tree a long time ago. Actually, I remember another saying. That is, he talked about a woman being pregnant. It definitely takes 9 months, and having 9 women pregnant for 1 month will not produce a child. That saying illustrates the importance of the time factor and patience in achieving results. Just now, and I shared what could be called the history of Warren Buffett's investment process, the lessons and the legacies he left behind. Now we will focus on Berkshire Hathaway's shareholder meeting in February 2025, and also his views on trade or recent events related to trade in the US. Here I would like to share Buffett's view on trade. Here is something that I think and I have already discussed. For example, the last time we talked about foreign trade, we said that free trade would be good for everyone. Here he also reaffirmed that balanced trade is good for the world. And he said that trade should not be a weapon. Trade, if used as a weapon, could also be a form of warfare, and in the US we should find ways to trade with the rest of the world. Meaning we cannot assemble iPhones or sew shoes ourselves instead of countries that are exporting them to us. So this is his view. In addition, he is also very concerned about the US fiscal deficit. He believes that currently the US government's debt is unsustainable, and no country currently has debt as large as the US, and this cannot last forever. This is also exactly what I analyzed last time regarding the decline of the dollar as the US government's debt constantly increases. Can you share more about this issue? The fiscal issue is one of the issues Buffett is concerned about. And why? Because he values the long term. We often value monetary issues. Monetary issues are very short term. That's right. So his perspective is that he values it because when a government's budget is strong, it creates a much more stable foundation for a business environment. And now people are concerned about the US government falling into a state of inability to pay, or the risk of a temporary shutdown, etc. So we will continue with Warren Buffett's views. Here it's the fiscal policy of the US. He considers the value of currency as something to be fearful of, and we don't have a great system to overcome that. This is talking about the US dollar story, right? I think actually with the assumption that we will always grow dipped, the table will constantly increase. It will look simply like this: I am a person who is doing well in business, and I constantly think that next year I will do better, and I continuously borrow money to do business. And this will lead to a day when if I am truly not doing well in business anymore and I have to face my debt. I think interpreting it like that will help people understand the US issue better. However, he still strongly believes in the US. I remember that in all his letters to shareholders he doesn't use the term United States, he uses the term America's corporate. That is, he calls the US a big business, and that business constantly creates value. He also shared that here the US has changed a lot since 1930, and has gone through many challenges. And I will never be discouraged about the future of this country. There is one final very important point, everyone. Here is the final point that the market has been talking about a lot recently. Can you share more? We also have two famous quotes from the recent Berkshire Hathaway shareholder meeting. The first quote is, "Stock fluctuations over the past 30, 45, 100 days are really nothing." We saw yesterday, user shared on my live stream that because it was May 1st they didn't go on vacation during the recent holiday. May 1st was when the tax announcement was made. The whole market collapsed and dropped sharply by over 10 or 20%, etc. So for him these drops are too small, they are insignificant compared to what is called the Great Recession. To be blunt, this is not a terrible bear market or anything similar. So we have seen that the market has recovered very quickly within just a few days. Warren Buffett's view is completely correct. That is the quote we see. Because he will focus more on the long term, so he won't care what happens today, tomorrow, or even next month or next year. No, but I need to clarify this point. If we say that he doesn't care about short-term drops, it will lead to the conclusion that it's okay if it drops, it doesn't matter. We should not forget that he had analyzed and prepared in advance, maintaining a I'll use layman's terms, a cash position. For a long time, he had already prepared. So if we are in a proactive investment position, these fluctuations are nothing, because we have prepared. Otherwise people will understand that because of the long-term vision, and those events were also anticipated quite clearly. I will add to that, and the second point is that he will focus on the business. And how he focuses on the business? Well, you know that just during the recent shareholder meeting, Buffett taught investors worldwide another way of looking at things. So I invite to move to the next content, and I will show everyone how Buffett teaches. I spend more time looking at balance sheets than income statements. This is a saying that I think many people are trying hard to convey to the market, but the market doesn't care. But when someone of Warren Buffett's stature says it, perhaps everyone will have to rethink. Because why? Until now people only cared about how much profit the company made, that is looking at the income statement. But Buffett doesn't look at that. This in the bare number program, how to look at the balance sheet, because that is called testing. That is, we check the items on the balance sheet. So how is it done? Even after this program, I also have a webinar where I will show everyone how to look at the Q1 financial statements and the balance sheet. So let's understand it simply like this. This is a big lesson that Warren Buffett gives us from very small things, but why did he emphasize this in the shareholder meeting? I will read this part again and please help me. Wall Street doesn't really pay much attention to the balance sheet, but he would look at the balance sheet from about 8 to 10 years ago before looking at the income statement, because some things are harder to hide or falsify on the balance sheet. This is very similar to behind the number, very hard to hide or falsify, because if you learn by a number, for example, people who follow the program will understand that they often hide things, where there are many methods, but what I will show everyone is the key point in Buffett's statement. Why does he look at the balance sheet from 8 to 10 years ago, before looking at the income statement? Everyone here, he says, for Wall Street, meaning representatives of financial investors, often look at the income statement first. But everyone forgets that the income statement is the business results already achieved in the past. We look at profit, Co-1 profit means it's already done. That's right, whereas our investing is about looking towards the future. So the past income statement usually doesn't reflect the future profitability, but what does reflect the ability to generate profit, or whether the business results data is stable, or if there are any fraudulent or hidden issues is shown on the balance sheet. So let me share clearly with everyone. However, if others shared this, perhaps people wouldn't believe it. But Warren Buffett taught us all a lesson that we must remember. That's the way I'll add this to the list of legacies. Okay, this is a small legacy, but such small things bring immense value. I think so. Just now, and I in a very short program reviewed his entire working life and presented what I permit me to call legacies. I also very much hope you can share your perspective on which principles you like the most. Earlier we had his 5 principles. You can rate them 1, 2, 3, 4, 5. As for the part that shared with us from the shareholder meeting, the so-called final one when he was still CEO, I particularly love this last part. Warren Buffett said that although he is retiring as CEO, he is still an advisor and will help those directly managing the company to ensure this. This is very important for Berkshire Hathaway shareholders. Although at his age, I think retiring now, I wonder if it's early. Or I guess I'll go back to the idea of retiring at 35. Here the assets, too many slides are many. We will go back to the chart of the elders' assets. I think I will print this picture and hang it on the wall because it is very comforting. I'm here. 44. Our line is only in the latter half of our 40s. We are in the latter half of our 40s. So what do we say? We say we are too young. We are still too young. Looking at this, you see incredible motivation to work. And working feels more joyful and happy, not feeling difficult, tired. That's the important point. Thank you very much to the team for compiling this for us, and we hope that a short program about the global investment legend Warren Buffett, who announced his retirement at the age of 95 during the recent Berkshire Hathaway shareholder meeting, will bring you a lot of information and different perspectives. And I hope you find this program valuable and useful, and that learning more about Buffett's life, understanding more about him as a person, his philosophies, from living to investing to business, will bring a lot of value to each of us. Please click the like button, subscribe to the channel. Thank you very much and goodbye.